the debate on high lending rates will not go away anytime soon. In fact, President Akufo-Addo brought it up last week when he tasked the newly constituted board of the Bank of Ghana to work around the clock and bring down the cost of credit. Cost of borrowing is very high in Ghana and places the nation amongst countries in sub-Saharan Africa with expensive lending rates. Inaugurating the reconstituted board of the central bank, President Akufo-Addo said it was not right for the spread between lending rates and the policy rate of the Bank of Ghana to remain high. Take a listen.
I believe we have learned, or should have learned, lessons both from our own history and from the experiences of other countries about how this partnership should work. History has taught us well that monetary policy must complement fiscal policy to create an enabling macroeconomic environment to promote growth and development of economies, including the Ghanaian economy. Ladies and gentlemen, I want to use this occasion to bring into focus a matter of great importance for the rapid growth of our economy. That is to urge the bank to interrogate the issue of high interest rates in Ghana and how the problem should be addressed to enhance the competitiveness of the private sector. It is surely not right that the central bank's monetary policy rate stands at 13.5%, whilst the commercial banks lend to the private sector at rates of 21% and above. This is a gap we have to bridge if we are to realize the vision of a Ghana whose economy is globally competitive. I believe the Bank of Ghana is best placed to lead this process of reflection and action. I want to end by stressing that the current socio-economic challenges of our beloved Ghana, occasioned largely by COVID-19, demand that every hand should be on deck. I wish to reiterate my call for even stronger partnership, as well as greater degree of policy coordination between the Bank of Ghana and the Ministry of Finance.
Well, just to add, the governor, Dr. Ernest Addison, in response said they will do all they can to address the high interest costs. Now, I should point out, Fitch Solutions research arm of ratings agency Fitch is projecting the Bank of Ghana to hike its monetary policy rate to 14.5% next year. Now, if you go by that, then your cost of credit will not come down anytime soon, but rather go up slightly from next year. Joining me is head of the finance department at the Valley View University, Dr. Williams Pepra. And thanks for your time tonight, sir. So in May, the central bank cuts the policy rate from 14.5% to 13.5%, and expectation were that banks would consider that and cut down interest rates, but that's not happening. Why do you think that's so?
Thank you very much, Darov. I'm very grateful for us to speak again. So if you look at what has happened within the financial sector, the banks are now being taxed to pay off the mess that happened in the past, which we have cleaned, which cost us 20 billion to clean the financial sector mess. So these banks are now are being taxed to pay. So in that case, what it means is that they will also have to find a way to bring up the money. And the only way to do that is to make sure that the spread margin between the central bank rate, which is the Ghana reference rate, and the bank's margin should be able to accommodate the new tax that government has imposed on them. So it's a way that you are asking banks to pay money to clean the mess. And at the same time, you are also asking them to reduce their interest rate. And we shouldn't forget that banks are in business to make money. And the only way they can make the money is to maintain a margin that will sustain them. So roughly, my checks in the industry shows that most banks, if it's a risk-free transaction, they will do a spread margin of about 4%. If they consider a riskier investment, most banks are currently doing 8 to 9%, and some at the extreme end of 12%, where they do 22%. So this is what is currently happening to reduce risks. The most risks that banks were facing in the past was how to identify their clients, where they stay, so that they'll be able to collect their money. With the coming in of this address system in the industry, and also the references where those who have borrowed are kept. These activities are helping the banks to be able to reduce the rate. But with the exception or the coming in of the new taxes, banks will struggle to reduce the margin. If not by the taxes, banks would have reduced the margin. So that is what is happening. The second factor is that cost of funds to banks are also becoming expensive now. So currently, financial institutions who are doing fixed deposits and in form of transactions are doing it around 17%, which is a cost of funds to the bank. So if bank, when they borrow from outside, they are paying about 70%, they will also be compelled to add their margin around 3% to 4%. That is why these funds are being sold to us customers around 21%. So if government really wants a reduction in the rates, government must review the tax imposed on banks, and in effect, it will affect them, bring the reduction. Also, with the coming in of the issue of how to reduce fraud in the system, banks are now compelled to invest in high technological softwares, and these are increasing the cost for banks. So this is one of the major areas that where we sit as analysts, look at where it's affecting the high rates of interest rate in the country. So if government can address the issue of software, IT infrastructure that banks are deploying to make sure that they become robust and are free from these cyber crimes and the rest, and also government reduces the tax which has been imposed on them, then the banks will be in the position to reduce the tax.
Just conclude on that.
The third option that central bank can come in is central bank going by what we all know, which we call interest rate targeting. The central bank will compel banks and say that no bank can do transactions above, say, 17%. In Nigeria, this is done. So, but in Ghana, we have been battling whether we have to do interest rate targeting.
Great. We lost a bit of what you said, but I think that we get it. We are making a point about what the Bank of Ghana has to do, because indeed there's a lot of pressure on the central bank. The president has talked about it. Last week, the special advisor to the president, Osafo raised this again. And you're talking about making a point about the Bank of Ghana having to maybe at a point ask the banks to cut down on the interest rate. I was asking you how realistic that approach would be, to demand that they cut down on the rates.
It will be difficult as we find ourselves in the country for the banks to cut down their cost. Currently, all banks, whether operating in this digitization industry for banking, or putting up physical structures, all comes with cost. The banks, if you look at their margins, they are doing around 4 to 8%. And their cost of borrowing, if they take it from the central bank, which is the 13.5%. So if government wants the banks to reduce their cost, then government, who is the biggest spender and also taxing these banks, must reduce, one, the corporate tax they pay, because they cannot, the banks, something must instigate them to reduce their lending cost. The major one we know is both the direct and indirect taxes. As we speak, I think that issue has been resolved, which is the clothing allowance taxes for banking professionals. This is a cost to a bank. With the central bank, if we want to ask them to reduce it, we can use this as if you're able to reduce your corporate tax rate by 5% for you, we want to see a reduction in the cost of lending. In that case, the banks will do.
I guess the point has been made.